Welcome back to the Daily Journal. So we are reviewing the 2 a.m. continuation from the London session yesterday. No trades on Monday. I was busy, but nonetheless, there were no trades, at least not for me. 4 hour is my high time frame, right? And with this massive gap at the start of the week, you just have to wait for a new phase of price to then get inside this move. So we've expanded. I'm then looking for a retracement to trade the continuation of the 4 hour trend. If price had expanded and then was met with more expansion back to this gap, I'd be looking at this as a reversal, since the weekly candle would have formed a wick. What would happen in this section, in the new week opening gap? Well, I guess we'll never know, because price didn't reverse, it retraced. And so, yeah, this was just a simple continuation model that I was looking to trade. So there was my liquidity. Right? Price had expanded, retraced into a 4 fair value gap. I was looking for price to expand. However, price did not close back inside. So I know, there we go. So just to this a bit closer. You can see that this candle body did not close back inside of this. So technically this is not a reverse. But dropping onto, down to the 15-minute chart for the 2 a.m. When I see a 15-minute gap out of a 4 fair value gap, I'll then look to trade the continuation of this model, at the very least, to these highs. So with that gap, that fair value gap, that liquidity, that's going to be my low-hanging fruit. So dropping down to the 1 minute. So I can confirm that price is delivering from these lows. All right, this 4 fair value gap. We've taken out Asia's lows. We've taken out this low over here. We've then had the change in the state of delivery. And I'm expecting price to trade up to this level here. So I'm looking at this as basically just a market making model, right? We've had the reversal. We've now consolidated at the 2 to 2.5. And I'm looking for continuation from this 15-minute gap to, at the very least, take out this previous candle's high and into the 3.5 to 4 standard deviation zone. And of course, this is all just low resistance liquidity. In addition to that, we also have realistic highs in Asia. So there's plenty of buy side liquidity for price to trade into. So this is my low-hanging fruit. These realistic highs. Right. All these highs over here. This high, this high, this high, and this high. So since price has now opened the 2 a.m. candle, we're now trading in discounts relative to that open. And we're trading into this 50-minute fair value gap. Now, what I noticed once I got to the 1 minute charts is, look at that 50-minute candle. It doesn't have a wick. So that's a form of inefficiency. So that's something to look out for. But I wouldn't want price to trade all the way down here. Right, we want to see expansion with a shadow retracement. In this case, we've had expansion, consolidation, and now we're looking for some manipulation, right, which is just a retracement. So once price drops into that 50-minute gap, I'm then looking for a change in the state of delivery, and I'm using that candle and not this, because this is the swing point that delivered price to sweep the lows and into the 50-minute fair value gap. There's your expansion, but with expansion, so I'm looking for a close above this level to get on the side. And there it is, and that's when I entered the trade moments before that candle closed. And so when we look at the SMT with YM, you can see that that YM has in fact taken out these lows. So technically speaking, Nasdaq has in fact dropped into this low. So YM did the dirty work. NQ has in fact, technically speaking, created a wick. That's not to say that that won't get filled later. Probably will, and in fact, I think it did. But had price not had SMT here, and we had this set of form, that would be a validation not to take the trade. Right? We always need some form of SMT. At the very least, one SMT. And so that's what we've got. We've got the candle close. We've had a change in the state of delivery. And now we can look to targets the opposing side. And since we've taken out the sell side, we can target our drawn liquidity. So one thing I didn't do yesterday was to use a standard deviation from this manipulation. You can always draw a standard deviation from points of manipulation. At every swing high and low, you'll have a swing high and low, or swing low and high, depending if you're reversing from sell side or buy side, that you can use standard deviation to project. So let's see how this played out. Right, so there was your standard, your smart money reversal of this market maker model. This is the stage one. The price should continue from this point, and there we go. Really, really nice delivery. So partials were taken here, and I took profits at this point. So 2.3, it worked out to about 2 hour. And you can see it traded straight into the 2 to 2.5. This was a better way to, I shouldn't have actually used this. It's still valid, but this move kind of resets the expansion. That's what standard deviation will project, is the expansion of a move, because you're projecting it from the reversal. The reversal confirms expansion, and so the standard deviation will project the move of the expansion. So this would have been a better move. And you can see it took out these highs. I mean, there's always liquidity on the opposite side to target. So which do you target? Ideally, relative equal or equal highs or lows. But standard deviation will always tell you which ones are the best to pick. So yeah, that's the trade. You can check it out. It's my journal over here. Entry at that change in state delivery. And that was my exit at 25976. This level over here. Great guys. I'll see you in the next video for the 6 AM continuation from this 4-hour model. Cheers.